Ladies and gentlemen, the S&P 500 has hit all-time high, and many people are celebrating. But I think it's also important that we take note amidst this celebration, there is things happening in Middle East. The US is sending 10,000 troops to the region and also a third carrier group to the region. Why? And I think this is something we got to be careful of what Donald Trump is saying versus what he's doing. Let's watch on as I show you some of these things that we should be careful about. So the markets are at all-time high. The S&P 500 hit an all-time high, NASDAQ all-time high. I think globally, many index have hit all-time high. And this is a case where people FOMO in. They really fear that they missed out on this rally. And there's rising optimism that Middle East situation will resolve very soon. And whatever is happening in the oil market will not come and bite us. When I take a step back, I said, well, I think there's a lot of optimism. I don't share so much of the optimism. Yes, I think Donald Trump, I don't think he wants to fight anymore. Neither does the Iranians. But it doesn't mean our problem is over. Oil flows are not coming back yet. But never mind. So we'll take a relook at my investment strategy throughout this period. And let's take a look at also the outlook moving forward. Taking a step back, I like to repeat my investment thesis and my investment strategy. And I taught this extensively to all my learners. And it's a very simple but powerful system that I adopt, has made me a lot of money, millions of dollars. And I'll just say this, the strategy goes like this, right? Buying globally diversified index fund on the cheap and hold them forever. I've repeated this quite a lot of times. And in this strategy, there are three parts to it. Number one, I will only buy globally diversified index funds. And I'll also buy them only on the cheap and I'll hold them forever. It's a three-part strategy. A lot of people just said, Mr. Lu, you crash buy, crash buy. I think it's important for you to know that crash buying strategy involves three parts to it. And I'm going to walk you through looking at these three parts, what has worked, what has not worked in this time. It turned out that the most important part of the strategy in this round is to hold, right? We need to hold them forever. Now, I see a lot of people panic sell in this crisis, and there's a lot of people FOMO as well. So I think it's very difficult for a person to be able to make money if you are not emotionally able to handle fear and greed and impatience. So I'll just say this, a lot of people are worried that markets, will bite them when the market falls. So what they do is that they will sell first, then they buy. I repeatedly say that this is a very dangerous strategy. The wise strategy that I would like to do is to buy globally diversified index funds and hold them for a very, very long period. When we say long, it's in terms of 10 years, 15, 20, 30 years, if you can hold so long. Now, in this period, we also learned that a lot of people say that this is the start of the end of USA, or the start of the end of the US dollar, or the start of the end of the US stock market. And they get very concerned, they get very fearful, eventually they panic sell. And I think this is what will ruin people. Well, just say this, that the USA is a market I'm not too sure you want to bet against, and that's very dangerous. If you were to take a step back and take a look at any globally diversified index over a very long period of time, you will look something like this. This is the S&P 500 over 100 years. 100 years of history, and in this graph, the y-axis here is a non-linear graph. This is a logarithm graph. So it's from 1 to 10, 10 to 100, 100 to 1,000. If you take a look at the graph, despite being logarithmically treated, it is still going up massively. And the other observation, if you can take a look at this, it has got a lot of crises being thrown at it, and it always recovers. So this is the biggest lesson that everybody should take, is that if you hold something that is globally diversified over a long period of time, you will always make money. So I think to take the bet that S&P 500, the US market or US dollar, will come to a devastating outcome in this crisis, I think that's a long shot. So if you take a look at my own personal portfolio using the S&P 500 only, doesn't include all my cash position or my other family members one. Well, it just looked like a very nice graph that go up and up and up and up. In between, there are lots of up and downs, right? And if you were to blow up this part here, this is the dip this time that we get hit, but it recovers, right? So not bad, okay, not bad. I would just say that half of it are profits. Now, I just want to say this, but what about those people that missed this round? Don't worry, there's always another round. The first thing we need to learn is that the market always recover. So don't panic sell to wait for market to go down and then you buy it back. Now, there's also talks that owning globally diversified portfolio, especially S&P 500 and NASDAQ, is the way to ruin you because the US market is going down. Well, when you bet on S&P 500, NASDAQ, MSCI World Index, or whatsoever, you're really buying top companies that are global in nature. So it's very difficult for global companies to all collapse and causing the index to collapse permanently. And if history of the last 100 years or 50 years were to teach us, they always recover from strength to strength. So I wouldn't need to bet on individual stocks. I just simply buy globally diversified portfolio and do me very good. Now, the second part is a lot more difficult, which is to buy globally diversified portfolios on the cheap. This time around, the maximum drawdown it took was about 9.9%. I got it at 9.9%. Some of our investors that learns from me actually got it at 9.9%, but it only happened in a few hours in one night. And unfortunately happened where only night birds would have caught it. So now, what if you missed it, right? Does it mean that strategy doesn't work? Well, I'll just say this. The most important thing we want to take away is that crashes are coming more and more frequently. So in 2020, we have the COVID crash. 2021, we have the great inflation crash. 2024, we have the crash as caused by, so 2025, there's a crash caused by the Trump Liberation Day. 2026, we have this oil crisis crash. I think it's very common now to have corrections. And I think the more important lesson out of this is that when it happens, be ready to catch it. A quick word on dollar cost averaging. Yes, I think it works as well. But in this exercise, I also noticed that the crisis is so frightening that quite a few people actually wrote to me and say that, are you sure it's still safe to do dollar cost averaging? And things like that. You see, they cast doubt. And some of them, I wouldn't know the details, but some of them would have interfered with the process. So it is human emotions all at play, whether it's dollar cost averaging, crash buying, lump sum investing, whatever strategy, all require one thing, emotional tahanability, and that's not easy. So I'll just say this, do whatever that you feel comfortable. For me, I feel very comfortable going in when the market crash. If you feel comfortable in whatever strategy that you adopt, go ahead and do it. But stick one that you are comfortable with. I like crash buying because the correction, buying at correction makes me have a lower drawdown. I like to see my portfolios always in profit. So that's just me. A quick word on patience. Now, a lot of people say, I missed this opportunity, it will never come again. Well, first of all, I don't think the crisis is over. There's always chance that it will come back and dip again. But I would like to remind everybody on the guru in stock market. That's not me. And I'll just say this is Warren Buffett. His famous quotation is this: the stock market is a device for transferring money from the impatient to the patient. And I think it's important for us to manage our emotional expectation, to wait patiently for the right opportunity, at least for myself. Well, if you think that you would like to adopt another investment approach, fine, go ahead. But I think that the last thing everybody wants to do is to be impatient and FOMO out your approach. Now, all said and done, I would like to say this. I think the worst is possible to come back and bite us again. So all the risks still exist, and a crash might return again. So the market now is pricing on a hope that the Iranians and the Americans will come to a peace agreement of some form. and there is no certainty that will happen. So right now, I don't see that happening, and I'll elaborate why I say so. First of all, the Straits of Hormuz is still firmly choked. Initially, some ships went past. Unfortunately, the Americans put another choke on the choke. So now it is dead tight, complete blockage. Well, whether some ships manage to sail through, punch through the blockage, I don't know. There are some talks about it. But right now, the Iranians are so unhappy that they are threatening the shipping in the Gulf and the Red Sea. Listen, they are not just threatening shipping in the Gulf, in the Persian Gulf and the Straits of Hormuz. They are also threatening in the Red Sea. So if they clamp down Red Sea through their Houthis allies, then we will have a mega crisis. Now, whether that happened or not, nobody knows. And that's something that the Iranians are very unhappy about, that the Americans are doing to them, and basically say that that is a violation of the peace ceasefire agreement. Now, I always say this and I'll say again, judge Trump by not what he says. Although the whole stock market judge Trump by a lot what he says, but judge Trump by not what he says, but what he does. Well, right now, the United States is sending 10 more thousand troops to Middle East despite the Iranian ceasefire. Why are you sending 10,000 troops when there is a high chance of a ceasefire or a permanent ceasefire? Not only that 10,000 troops are arriving, we also have a third carrier group. The USS George Bush is arriving as a convoy, and it is very unusual for such a strong military buildup. So what are you doing in this midst of a ceasefire? So I would just say this, I am not so sure that the worst is over. Now, if the worst is over, the market recovers and have a bull run, I'm happy. I'm sitting on a big portfolio of stocks. I'd rather it goes up. This dip has cost me quite a lot of financial correction. I would say that's a euphemism for losing a lot of money. Thank God it has recovered. But if it comes again, then of course we have to take those financial losses again. Well, I would just say this. The key thing that we need to do now is to accept the fact that market crashes comes very often. If you subscribe to my thesis, then there will always be opportunity for us to take positions. The question really is, when it comes, will you be ready? For those people who are patient, the market rewards you with wealth. For those people who are impatient, you decide what is the best thing to do for yourself. I think there is a high chance that the market will go into turbulence again. When it happens, I want to make sure that I'm ready. What about you? So thank you for watching, and I'll see you in a live stream.